Hey, good morning, Dzień dobry, everyone. So yeah, starting out today, it's kind of funny. I had power outage, so all my charts, all my computers were down. So getting everything going this morning, and one thing that it messed up my settings in OBS, so I don't remember where my audio settings were. So if it's the audio's a little too messed up or too quiet, I'm sorry. I'll, I'll work on it throughout the day to make sure I'm okay. All right. I think it looks okay right now. So um, coming into London Open right now, and we'll let it kind of do its thing. I never trade right at the open anyway, but uh, when I loaded up my charts, I left drawings from yesterday, and I'll bring it up on the 5 minute because I'll show you. It's a trade that worked out. Now, for me, um, I wasn't on the charts at this time. This is like Asia session, but I'm sleeping. I'm in London time, so but I left this on just to show you that even things that we mark out like the day before can still be a great entry like in the future. So what am I talking about? Yesterday, there was an area down here. Maybe I'll start. 'Cause this was originally like a 15 minute. I don't know if everyone remembers, but if you were here with me yesterday, this was London area. It was moving up and out. And I had mentioned, well, if the price comes back here, I would take it. And at the time, you can see it's kind of faded out now, but this was where the POC was. And I had mentioned it wasn't a great area for me because of that, because there was Asia Open in the previous day close in this area. So I had refined my entry down to a different area on a 5 minute. And these white lines were kind of my options to get into the trade. My stop was going to be underneath uh, this candle right here. And the box that I drew, this was going to be like first entry, my stop down here. Um, so if I come over to the 5 minute, you might be able to see this a little better. It's pretty wild. So I still have my circle here and the entry lines. And if I zoom forward, it looks like right around 9 o'clock Eastern time, Asia moved the price down. And let's see if this first, let me go here and kind of look. So, because I like to look for like one to one. So, you know, when the price came down into this area, looks like it engaged all four of my entry spots. And I admittedly, I would probably be a little nervous with this move coming straight down. I don't know how fast that actually happened. It looked like it happened pretty quick. It came down into the area, uh, pushed out of the area, didn't come up to my one-to-one target. But then you can see came down again, hovered, and just kind of stalled out. And my stop would have been right below this box. So if I get in even closer, you can see it. It gave you some heat. So, realistically, you were very close, little over 2 points away from hitting your stop. But um, this was not an expensive entry, if I remember right. Yeah, it was about $71 for the first one. And I think just eyeballing it, I probably could have taken every single entry, still been in my budget or close. Maybe I'd take three out of these four. Um, but you can see how this actually held. And look at that move back up. you know, like if it came down here, got in, I would have taken 1-to-1 on, if I was in 4 contracts, 1-to-1, I'd probably take off 2 or 3 and then let one run. And my target could have been the VWAP line and definitely could have been up here at the POC. And if you're looking at between there and POC, 358 ticks, you know, neighborhood of about 90 points. That's a heck of a trade, heck of a reactionary area. So that's pretty cool to see. I didn't get a chance to take that off before my charts crashed. So, but I'm going to take it off now because it's been used and it's not an area I'm even interested in. So we get rid of that. Okay. We've got some clean charts to work with. I looked at news. I didn't see anything for Europe session. There's some stuff later that will affect pre-market New York and New York, possibly. But let's just kind of go through the same thing I do every day. And not super exciting, but it kind of gives me an idea of how I'm expecting the day to go. So let's look at the daily chart. So it's still the same plan here. So since I've started streaming this week, momentum short term has been down. Overall, it's up for sure, but short term, definitely down. We had this big move down. That would have been what, Monday? Yesterday, little push up. It's inside of the Monday's candle range. So yesterday was basically like an inside day. Didn't peak out on either side. And then today, we're starting out, definitely inside of yesterday's range so far. It's kind of indecisive of what it's going to do right now. You can't really get too much out of this, but because short-term momentum is down, it's still the same plan for me until we start to see the price move up and start to, change some direction. So the plan is still down for now, and I'm still expecting that the low of this bigger candle from Monday is going to be possibly the destination. That's just what the short-term chart is telling me, is down for now. So we'll see. We'll see how that plays out. That'll be important maybe tomorrow, but we'll monitor that during New York. All right, so let's look at the 4-hour. So as I dive into the 4-hour, what's the 4-hour telling us? All right, so 4 hours pretty ugly right now, honestly. We had the momentum down. We've talked about this area quite a few times. I even had, I think I erased it. I had a couple of areas that were of interest. I wanted to see what happened here while the buyers went above there. My next spot was here. The buyers got above here for just an instant, whipped everybody out. That was maybe had stops above the 4-hour candle body, and then started to move down. And then what have we done so far? Well, a little retracement from this little up move. Buyers stepped back in, couldn't do much, and then sellers came back in, took all these buyers out. And the last 4-hour candle, buyers stepped in, but haven't been able to take out this candle. So on the 4-hour, I'm still looking at short-term direction, momentum down. Now, if the buyers here over the next 4-hour candle, and it's like 3 hours until it's done, first key point, they got to get above this one. They got to get above this one. Then get above that and that, then destination up here, for sure is where I'm thinking. But if not, I can start to look at, well, what's on the chart that could be targets on the downside. This low down here, from a few days ago for sure, would be a target. I could also see it digging into this fair value gap, some balance on the 4-hour. It has been touched over here. And you're talking, that's like 3 weeks ago this was made. One area I'm interested in is the 50% of that 4-hour. And I'm going to mark that out. That's a heck of a move if we can get down there. You're talking that's about 450 points or so. Let me see. Do I have something on here? I can change color. Maybe this one. Yeah, there we go. All right. So that's really clear, evident on the chart. So if price were to get down there and London really moves, that's going to be an area where I'm going to look. Now I'll say area. I will look. I may have to go down to a lower time frame to see what's in this fair value gap down here, but we'll mark it out. Now I know that it has been touched. Part of it has been used already. But let's see. So I'll mark this 4-hour. Okay, so we have that on all the charts. Anything else interesting on 4-hour? No, there's no gaps. This area up here has been used. The only other thing, we had this drive down from up in here. Now, the indicator math, it tells me that this is like a supply demand zone. And, if anything, this last move up in this candle right here, a solid candle, you could call this like order block. And this order block, still holding, price pushed away, came back in, touched the order block and went. So this is kind of an area of interest, but just like way down here, I mean, it's a heck of a move for London. You can do it, but I'll hold off on adding too much to my chart for now, but I'm going to keep this one at the bottom. And so 4-hour, just filing that away doesn't really tell me a whole lot. Okay, let's look at the 1-hour. Get rid of those. I think that was, maybe I marked those yesterday. Yeah, I think I marked these as like areas of interest up here. Like I wanted to see buyers come up here, challenge these areas and get some type of idea of what might happen with price. So on the 1-hour, we're looking, let's go down and look at that 4-hour fair value gap and see. Look at that. So interesting. We've got another fair value gap on 1-hour within the 4-hour. So let's mark. I want to mark this too. We'll hold on to these. Like I said, it may not come back today, but these I'll keep on the chart for later, maybe in the week. And I'm going to mark out the 50% of that one also. And I'll do the same. So we'll kind of track these together online. They may end up becoming a factor in New York, but what I like about the 4-hour had been touched up here, and it shows the same on the 1-hour. But this 1-hour, pretty solid move up and out. And you have another one down here. But you're talking that's another 200 points down. So we'll see what price does at this area first. I don't want to put too much stuff on my chart, and there's already enough on here with these indicators. So all right, so one area I'm looking at, I'm a little bit interested in, but only if one thing happens. All right. So we're on the 1 hour. Here's a fair value gap. So we'll go ahead and mark this one out. Okay. So mark it, put 1 hour on this guy, right? I'm going to put an entry right at the 50%. Okay, because that's kind of my interest at this point, because the fair value gap was already created. The imbalance was created here with this move up, right? It's already come back and touched it. So I'm not interested in like the first entry from that gap, right? I could be interested down here too, right? So I have kind of two entries left in my mind, and these are really the only entry areas of a higher time frame fair value gap imbalance that I'm interested in. Middle point and this one is left. This one already done and taken. Would that one have, hit like 1-to-1? Let's see. Yep. So when it came back and touched that, if you were to take this first entry here, you were in for about 112.50 on the risk, and it came up and it gave you more than that. So not a bad entry on that one. I wasn't at the charts at the time, so that didn't happen for me. So, okay, so would I consider taking this trade? Right now, from what I see, not really. And the reason being is, higher time frame daily, we're momentum down. The 4 hour is a bit indecisive, and 1 hour is a bit decisive also, and indecisive, sorry. And I'll tell you why. If you just look at the price action from yesterday and today so far, buyers from yesterday, if you remember, this was kind of our time that we traded yesterday, big push up, right? And then New York eventually brings it kind of back down, and they center out right here for the end of the day. So Asia opens today, they push this thing down, right? So on the 1 hour, this move down tells me it is momentum down, right? At least short term on the 1 hour. Now, the buyers come in around 10 and they push it right back up. But what couldn't they do? What couldn't they do? What couldn't they accomplish in my mind? They couldn't get above the sellers that started Asia out at the start of the Asia session, right? So you've got Asia open, the yellow line, and the purple line is yesterday's close. Buyers push, 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 push. Couldn't even get there. Couldn't even get to the top. So sellers are defending here. There's lots of sell stops there. Where are the sell or buy stops? Well, they're going to be down here where the buyers started their move up, right? So I got really two important areas I'm kind of watching. So you got that area, you got this area. Kind of the battleground. This will give me the picture. If one side breaks and momentum continues, then things can really start to change for the day for me in terms of how I'm looking at it. But for now, because I have sellers here and buyers here, this is kind of the middle. And what am I kind of expecting at this point? We could have kind of the build for the day, the consolidation. There's a lot already starting to tell me this, because 1 hour, here's the pivot point for today. We are hovering right on that. And the pivot point, you can look at the starting one as kind of like your middle point of action or direction for the day. You can see resistance 1 up here and support 1 right here, and we're kind of in the middle. Doji candles on higher time frame means build. It means sideways price action on smaller time frame. It means your range on smaller time frames right now is bouncing basically in that area. And is it a good size range? Well, you got 266 to about 220. So the range is about 40, 50 points, give or take, but you can see the candle bodies in here, and I've got at least 4 hours of price action built into that box. And every time a candle dips out, or wicks out, um, price comes back in, it goes to the other side, um, hitting both sides within the same hour, so if you if you're to look at this and it's going to be consistent and you're still in this range, this candle that's open so far for London, and we're 20 minutes in, it's already dipped out once to the bottom side. So if this pattern is going to continue for the morning with London, uh, my expectation, well, it's probably going to peak out to the top side. So it's probably going to move its way up and bink, come out the other end, right? I can leave this on here so we can just kind of see. Let me attach it to all charts. Okay. So we'll just kind of look at this, marking out on the 1 hour. We'll take a look and see what this looks like on the lower time frame, right? So let me extend that out. So we've got some room. All right. So the 1 hour tells me we're probably consolidating, right? Okay. Now I mentioned high and low, and I want to see what does price do here. Where does it give me a good push? Where does momentum come in? Right now, we don't know, and I feel like this is kind of middle in consolidation area. Now, would I take this fair value gap down here because the buyers came in and pushed it up? So buyers show strength. No, it needs to show me more, and I'll tell you why. The sellers are clearly still in control. They're the ones that pushed down all the build and price action from yesterday in New York. So sellers, at least short term, are in control. But what concerns me about the sellers is when I look previous day, what did I want to see? This push up from yesterday, London time frame, bam, straight up. Well, these sellers came down, right? And they hit this area to challenge this move by the buyers. And what did the sellers do? Well, they couldn't get past it, right? So, unfortunately, I can't say the sellers are in total control right now because buyers moved up, sellers came down, challenged this area, couldn't do it. Buyers stepped back in, but then they couldn't take the sellers. So, potentially, and this is a much bigger area, but you could almost say you got this huge range so far, if you take yesterday and today into account, right? So, but that's, we're talking 300-point range up and down, but price is clearly bound within those areas right now. And that's how I look at the market. But today, so far, we're kind of in this area. So for me, would I take, if the price comes back here, would I take that? In the middle, no, not at this point, because the buyers couldn't take out this high. So I don't know. The sellers could very well just dump it and finally get below this move here, get below yesterday's move. And then if it shows me that, then I know on the chart, sellers are in full control for London. And, we can start to look at targets like this low from yesterday, or we can look at this pivot down here for a target or whatever else is on the charts. So we still need to wait a little bit. One area I'd be a little bit more interested in taking, not the middle point of the fair value gap, but if I, let's see, what can I use for, here, I'll just take this circle here. This area in here, which was on my indicator, this is basically showing like, kind of like a order block type setup. And it's untouched. So it was created, big push out. Price hasn't come down here yet. This is what started the fair value gap. This is what started the big move up. So I'm a little bit more interested in this area, this first entry. but I'm still hesitant because this right here, the strength of this, I already know without even looking at volume profile. You know, this was created in Asia. There's probably not a lot of volume down here that produced this move. And this move, even on lower volume, couldn't take out this high. So will that hold? Maybe. I think I would have to see is if the sellers really come down fast and furious, are they going to just blow right through here? Or does it kind of slowly come down, kind of touch this area and react and move back up, and we're still in that range? So we'll leave that marked on the chart, but the chart has to show me a little bit more before I just blindly take an entry there. Okay. 30-minute. Does 30-minute tell me a different story? Okay, so now we're starting to get volume profile in. So you can see right now we are at the POC of the day, which for me is really a no trade zone. I don't take any trades that initiate or start out of the POC if I can help it. It's just a bad area to get involved in because, like I was saying yesterday, the price just likes to fluctuate, do random stuff, and just, you know, when you're thinking it's going to do something, it does something different. So the area I just marked out down here, this is that 1 hour fair value gap. You see price starting to come in. This was the 50 on the 1 hour fair value gap. This was the entry based on, it was like that order block zone is what I'll call it. And this is where the price moved out. Now, I'm a little bit more interested in it simply because there is another fair value gap on the 30-minute here. Now, the 30-minute has a 50% line right there. And it shows kind of being created down here. And I'm starting to build out maybe a reason why to try it, try to take a buy, because now I've got a few other things. Now I have two pieces of information. I've got 1 hour fair value gap, 30-minute fair value gap. But not only that, I do have something else in here too, and that is a put wall. This is on the option side. Now, I don't trade this stuff, but I know that this is going to be a little bit harder thing for price to get through. So I would expect if price comes down to possibly react from here and push up. You know, have a hard time, maybe start to move around, move back up. We do have a little blip of extra volume down here. It's not a lot because of the time of day. But if it truly is a consolidation type day and they're going to build out this volume profile, I would expect it to come down here and then move right back up to POC. So we're going to go ahead and mark this out. This is going to be, let's see if I got one for 30-minute. Yeah. Okay, so I'm going to mark this out as my 30-minute zone. I'm not really 100% interested in this area. You know, would I consider taking something in this fair value gap on the 30-minute? Maybe. Let me take a look at risk. This would be the 50% of the fair value gap, and I'm looking at 115. So if I had an entry there, it'd be 115. And if I had another entry right here, it's like 80. 80? Yeah, $80. So that's within my budget. So we can really start to think about that as being an option. I can get 2 contracts. You know, my average between the two is going to be somewhere in here around 143s maybe if it comes down here. So not bad. It's food for thought to take something like that. All right, so that's the 30-minute. Let's go down to 15. Let's see if we can get anything better. Because right now, looking at the sell side, there's not a lot for me right now. And we can look at it as price goes on, but I'm a little more interested in the buy side. And as we look at the 15-minute and start to look at the initial balance too, let's talk about that real quick. So purple is Europe, cyan color London. So far, London has opened in this area, pushed it down. They got below Europe's IB range. So my expectation is London keeps moving it down. They go hit Europe's target, first target right here at the 0.25. We've seen 2 days in a row where London has tried this. They come down, they can't get it. They can't get there, and they start to move it back up. And where do they go? Well, until London's initial balance is made, they go back and they look at an area like the 50% of Europe. Will they do that? We don't know. The chart has to tell us something. Right now, it looks like London may want to push it down. So at least that's what it's looking like on the chart. So we'll let it play out though, because the market just opened, and I'd like to see I really like to see that first hour IB created, because I feel like that gives me a little bit better picture of what London's going to do. So I'm never feel rushed to hop into a trade on these charts until I see some evidence about what they truly want to do. Do they start hitting targets? Do they start achieving things, doing things, right? Oh, shoot. I just moved that. Okay. Is that where it was? Let's see. That was on my 1 hour. Let me go back to the 1 hour chart. Okay. That was the fair value gap on the 1 hour. Okay. All right. Okay, so let's go back to 15-minute. And what I'm really interested in right now, I'm not interested in this area. This is going to be a really tough area to trade in with the POC. And I can also take, real quick, one thing I like to do is kind of look at the range for today. From the low to the high. So the bottom, okay, so just to give you an idea, let me put that back on here so I can show you. From the low to the high, and this is just a Fibonacci retracement. And I'll mark this area out. 50% of the day is always a dicey area because you don't know. It's kind of the value area, and the market has to decide which side of this value does it want to go on. Buy side, sell side. So the 50% of the day's range is right here. Okay, let me take this off, and we'll see what else is there. Ah, interesting. So this blue dashed line is VWAP. Where is everything at? Well, right here, you got VWAP, you got 50% of the range, which is the low and high right now of Globex. So high is way up here, low's here. So we're in the middle there. POC is right here. 50% of Europe is right here. So this box was my consolidation box from the 1 hour. I'm going to take that out because I don't want to confuse anyone. But I would say that this area from the 50% to the POC, this whole area right here, I'm going to make it a little different color. I'll make it dark. That area in dark blue is like a gamble area. If price gets in here and I take a trade out of there, you might as well flip a coin because you just don't know. honestly. So for me, I will wait. If price wants to move up, then I want to see it get above 50% of Europe. If price wants to move down, cool. Um, it's below this box of where I'm going to say is a no trade area for me. If it wants to push down, cool. I can take an entry off the box area. And I mean, if price comes into it, it could be risky. I could lose. But this is also an area of lots of volume. Could be an initiation point where, you know, if price does move down, um, price comes back up, and, you know, sellers may be in here to push it right back down again. But you could also have buyers in here too. And the buyers are just waiting to get that price back in there, find, you know, a little cheaper value by buying here at the low end of this area, you know, because that the VWAP is, it's a like an institutional indicator, showing the average weighted price of the day so far. So this is like fair value. It's also the 50% of the range. And we're at the most traded area of the day so far. So I'm going to leave that on there for now because this is like a good sign for me. It's like, who cares what happens right here, really? Because I can't rely on structure of the market in that box, right? For me, it's kind of gives me, or it needs to give me more indication of what it wants to do. All right, enough talking. Okay, 15 minutes. Okay, if the price does come down here, which it could, because I'm starting to see some targets from Europe's range into this area. A 2.0 extension on a decent IB range is a good, healthy move. Um, you know, Europe is 74-point range. Can it come down here? Yeah, and it can probably come down with one candle. We've seen it the last 2 days where London's made a candle that's been, I think, 70 points yesterday in like 1 minute. And Monday was, I think, closer to 80 points in maybe 30 seconds. So I know it can come down here, touch, and react. So this area becomes a little more interesting for me. On the 15-minute, I do have a fair value gap in this area also. It correlates to the 30-minute. I know that this put wall from the option side can be a magnet. You know, do I want to enter up here? Do I want to increase my risk? I mean, you're talking a matter of a few points. You know, and it could very well be a situation where the price does move down here. It hits this 15-minute fair value gap, reacts, and moves way up. And I'm sitting at the 30-minute fair value gap, and it never hits it. I totally missed the trade. It sucks when that happens, and it happens to me a lot. But for me, you know, I look at the charts and I call the shots on the chart, at least for me, on where I want to enter. Where am I willing to get into the market, risk my money with the best chance that I feel that my trade might win? And for me, that's still going to be the 30-minute. I know 15-minute fair value gaps, you know, time and time again can really be strong and react. And, you know, if I'm looking at this move from early this morning, you know, you've got what, three of them that were created. This was the first one that kind of gave you indication buyers are kind of getting into control. And then they really showed it here with this move. So if the sellers can move this down, you know, they're erasing a lot of the work. It's going to put a lot of heat on the buyers to keep this up. I'm guessing most of the stops are down here, ultimately down below here, you know. But I think this will be a defended area. It'll be a reaction area. So I would look to have an entry here. We're talking that's $80 on that one. Like I said, we got the put wall right there. So let's continue to kind of monitor price action, what it's doing. If it does get down here, that'll be an entry for me. On the way down, if we start to see good movement on sellers and we start to see that good push down, maybe I consider taking a sell, get on the side of momentum, which for me, looking at the chart, it's definitely more on the side of the sellers because the buyers couldn't take them out. But at least for today's price action, sellers are still in control because the buyers couldn't come back up and hit this area up here, which this area up here is huge target for the day. So if the buyers do step back in, they start getting above the sellers here at the London IB high, I fully expect, my expectations are very high that it comes to that area. This is like huge magnet. Asia opened yesterday's close, value area high, and also this gamma max area is where most of the options are being traded for the day. So it's similar to the same effect of POC where most volume has been traded for the day. This is a major target. I would say magnet. I wouldn't trade off that, but I would certainly feel that if price comes up and starts moving in this direction, it's going to get into that area or touch that line up there. Okay, let me get rid of some of my drawings, kind of clean up the chart a little bit. Let's see, can I get rid of this guy? Yeah, all right, I'll leave this on there because for me, this is truly an area I don't even want to consider at this point. Okay. So that's 15-minute right now on the top side. Is there anything in here? Well, for the sellers, it's not a super great area for me, at least not on the 15-minute. I can hop back here to the hour. It's just not that great of an area for me to consider any sells right now. Let me open up the chart a little bit bigger. Let me go back to the 1 hour and take a look. Let's see. Yeah, this is ugly up here for me. A lot of trading up here. I think I would have to probably look at if the buyers get up, if I'm going to consider a sell. I don't really have a reactionary area I'm interested in. The buyers take over and it starts to push up. I'm going to look to get in with them and become a buyer myself. All right. So the only reaction area I'm looking at is down here. That showed me on like, not really, well, on the 1 hour, you can say 1 hour for sure. 30-minute showed me and 15. So let's see if the 5-minute can give me anything better to kind of make my entry a little bit more pinpoint. Just a lot of sideways action. This is, I think it's also, yeah, this is also the same area that pushed out, that I was showing you at the start of the screen. This was my area from yesterday. This is where price came down. I think yesterday my stop would have been just a couple points below there. So this area once again, which showed some resilience and able to hold and push out from here. I would be counting on buyers still being in this area to defend it. And that would be my reason for the trade. So maybe the only other thing, because I know if I take an entry right there, we're talking $80. You do have this 5-minute fair value gap. Could be a point where I'm considering maybe a first entry. I remember seeing that on the 15-minute too, there was a fair value gap in that area. I think I need to make something for a 5-minute. I have just the 15. Okay, I'll do that just so I have it. So we know that there is a zone in there. So let's go back and take a look at the 15 a second. I want to see if that lines up with the 15 as well. And it looks like it does, but the 15's a little bit deeper. So the 5-minute 15 start at about the same spot, right? And but the 15-minute goes to where my entry would be right around there, that area. Yeah, this could be your launch point, or at least one reaction. So maybe knowing that I have $80 from this point, this one's probably going to be closer to maybe $90. So I could take an entry here and just see, because this could be the reaction point. Maybe the price never comes down here. Do I feel like it will? Yeah, and it's not really. We're talking like 5 points on the chart. You know, if it's a matter of missing the trade, maybe I take it here. And we see, and many times I've had it where price comes down, hits an area, pushes out, hits a target, comes back down, hits the next area, pushes back out again, hits the next target. So we'll assess that when we see what the market's going to do. And right now, just quick comment. So we've got 15 minutes before IB is set. So we're still continuing our analysis on London. Okay, so I look at the chart. The first thing that pops out to me, London did get below Europe. Okay, that's kind of like first baby step. Boom, got below London, or sorry, Europe. What's my expectation for London opening? Go to Europe's first target. What didn't they do? They pushed it all the way down and they missed it by 1.5 points. Pushed it down. This is absolute expectation and it couldn't do it. So what does that tell me? Well, we're still in some really junky price action. This is also a little bit of a red flag warning for me if I'm a seller, because if I'm taking like breakout from Europe IB, well, we couldn't get to even the first target. And we're not talking a whole lot of move here. We're talking, it's pretty tiny. Let's see. We're talking about 16 points or so. It couldn't get there. And now what are we doing? We're moving back up to the POC. We're moving back into what I would call the junk zone. And I'm just not interested in here until we have something more firm and the roadmap is given to us for the day. So let's continue to watch, see what London does. All right. Okay. So just wanted to make that comment because that's a little piece of the puzzle for the day and when they can't achieve certain goals. All right. Looking at the 5-minute, anything on the sell side looks interesting. No, not at this point. This is all going to be my no trade zone area. The price to get out of my no trade zone area is going to need to push above the Europe 50%. It's going to need to get past. Let me make this so it shows up on every chart. Maybe that'll be easier for me to describe it, right? So you can kind of see from higher time frame chart, this is going to be really my no trade area, right? But I don't really have a buy. At least I'm not interested in a buy unless the buyers can push I'll call it first baby step. They're going to need to get above this move down, right? That shows me, okay, buyers starting to be a little stronger if they can take this last move down. Buyers are going to need to get above here. They're going to need to get above here, right? Because what does that show me? Well, you know, sellers moved down, buyers moved up. Sellers moved down again, buyers moved up. So sellers are in control here, here, here. And ultimately, you know, this area. But roadmap tells me, as we will watch this, if the price gets up here and we have some targets up here for London, chances are London can absolutely blow through this price action from around midnight Eastern time and get up to this top side. Because really, this is such a huge magnet. You see this stuff hit almost every day. Price is going to run through this area at some point. It'll come back to visit that. So we watch. So on the sell side, on 5 minutes right now, I have nothing interesting for me. There would only be one spot where don't know what that was. Some alert. So I have one spot that would be interesting to me, but I can't take it because it's in such a bad area, and that's in here. And the only reason why I say this would have been an area I may be interested to get with the sellers is because we had momentum down. Like this last move of buyers up, they couldn't do anything, and then the sellers, you know, pushed the price down lower. So I would have been interested. I'll just give you an idea in this area. You know, the sellers came back up. Where you put your stop, well, I probably wouldn't want to put it too high. You can go here or up here, but you also have to know that the IB high, which is right here, IB low, are huge targets also for the market. So if you put your stop here, you would know fairly quickly, is it going to work or not? Put your stop here, you know, if the buyers break through here, what's their next stop? IB high, and you're probably going to lose there. And you're going to lose more because you move your stop farther. And then ultimately, if you move your stop way up here, it's kind of the same thing. You're increasing your risk. Price is moving up. It's, you know, potentially breaking through where sellers were in control. And if price breaks here and it breaks here, that's 2 points where the sellers had control. Then you're giving like all your faith that this area can hold and keep you in the trade when you know ultimately that if buyers step in, they want to get up here. So if you put your stop here, you probably end up, you know, maybe you get a little reaction because there's probably going to be sellers there. They're going to protect their stops. But if seller or buyers come in with enough force, they're just going to bust through that. And so in my mind, it makes that definitely a riskier trade. So it's just all kind of common sense as I look at the market and the chart. So sell side, don't see much. Oh my God, I did it again. I moved the 1 hour. Maybe I need to just take that off. I keep touching that and moving it on my chart. And I don't want to do that to confuse anyone. Okay, so what I'll do, let's just get rid of it because I keep moving it. So I'll know that I'll mark this a different color. This is the 50% of the 1 hour fair value gap. All right, I got to file that away in my head. All right, let's see. Can I do? Yeah, we'll go. I'll mark it 50% 1 hour. All right, so we can see that. That way I don't have a big area or box on my chart. I already got enough drawings on here. So, okay. So we know that that shows up right here, 50%. So I would expect, you know, some kind of reaction out of there. But would I take a trade on that right now? No. it would be much too risk for me, because if I look on a lower time frame chart, if I enter to buy off of that 50%, you know, to be somewhat safe, I need to at least get my stop below some type of price move up, so be at least here, be 115. Um, to be more safe, you're looking at the very bottom, you're looking at $160. That's one micro. And I feel like if sellers get in, they're going to take it down here. There's not really anything stopping them. And I wouldn't count on these two 5-minute fair value gaps stopping price. You may have little reactions out of them. I think ultimately price wants to get back down to this area where most of the volume is going to be sitting. And I also feel like the volume profile will fill this in. So price is going to come down here at some point. All right. So 5 minutes, as I was looking at this, I was really kind of interested. Was there anything else in here that could maybe give me like another entry? Because I know this one's about $80. So I still have room in my budget to try to get maybe one more in. And sometimes when I struggle to find something in this mess, which I am right now, I'll take my fib tool and I'll just measure this little box that I drew out, and I'll look at 50%, and I'll just kind of shoot a line in there. And I can mark that out on my chart also. Oops, get rid of this. And we'll call this 50% entry area. And we'll go with that, all right? So I think my plan right now, I'm going to get rid of these other entries because I'm not really going to consider them. I want to enter the market if it comes down here. Okay, so I have technically 3 entries I'm interested in. Let's see what the cost is on everything. Can I afford all 3? Okay, first one, 89, we'll call it 90, right? $90. Second one would run me 80. So it's 170. And then my 50% is another 40. So it's 210. So for me, I can't afford all 3. So what do I do? Well, I've got $170 if I do here. So what do I do if I want to afford the budget of 200? I got to move one entry. I feel like this is a strong entry. This is a strong entry. This was me just doing a 50%, which a lot of times, if price is going to move down, it's going to get into these areas, right? So if anything, I'll move this entry down a little lower, just to try to get a little better price and get within my budget. So what I'll do is I'll move this entry down to $30, and I will change, and I'll move this down to there. Okay, now I know I've got $30 there. I have $80 there, right? So it's 110, and this guy is 90, $200. That's my plan. $200 entry. If it works, excellent. If it doesn't work, that's fine, because I got in with a plan. I have my why. I have confluence. I've got everything. I've analyzed everything. I don't mind the area. The only thing that would stop me from being just a blind entry in hoping for reaction is I always have to watch what is price doing. And you can get a sense if price really starts to take that train down and starts to move super fast. Do I want to take a reactionary trade? Probably no. I think that's dangerous because the market's goal is to take out this low. What I'm hoping is that it comes down with some decent movement, and reacts out of this area. And what does it do? It still consolidates, moves all the way back up to POC, the VWAP, something that I can target. So a lot of this is discretionary. We just have to kind of watch and see what happens and how the market's reacting. So, all right, so this is the new hour. We're really going to monitor this really close because the IB is set. We have our targets, and you can see this target down here, the 2.0 for London. That's really close to my last entry. I had an entry up a little higher. I moved it down because I couldn't quite afford it. But I'm curious to see if I measure out the 50% where that falls on that target. That's pretty close. Okay. All right, so let's see what can London do here, right? Now I'm expecting, we got a new hour. Price has just been moving in the middle for the first hour, so it's not really doing a whole lot for me. It's in my area of no trading around the POC. So this could be a very lackluster London trading session, but I get them at least once or twice a week. This is kind of what happens. So, but I'm going to move fast here because if I see buyers step in and start to, move out some stuff. Give me a second here. Move out some stuff that, I need to be very cognizant of what the market's doing. So, taking a look. I also have a VPS that's running a strategy that I'm testing. So, looking at that, just want to move it to the other screen. Okay, so watching. So we're still in the middle of the POC here. And all we can do is wait. Like I said, this is a gamble, and I think maybe this will be good to see because, so many people would be taking, trades based on market structure and, what is the market doing. But right now it's really not telling you too much, right? The VWAP. So, but maybe we start to get a little bit of move down, but I'm very careful with how I get into trades. I want to see candle close. I'm not getting into trades at times where the candles are still moving. So we still have 2 minutes on 5 minute. I wait because if you look at, candles a couple minutes before close, they can look very bullish or very bearish. And then by the time they close, suddenly they look totally different and give you a totally different story. So super important for me to at least wait until the candles close. All right. So far, what are we seeing? Well, London, made their IB range. It's pretty darn close to Europe. Is a little bit lower than Europe. Couldn't hit Europe's target. So far, no target hit for London. What did London do? Okay, just for the chart and clean it up for viewing, I'm going to take this off because we know I don't trade around the POC. So there it is. Okay, so we got POC right here with this line. You can see it. POC. That's exactly where we're at. London pushed down, made their range for the day, the high, the low. Okay. Now with this candle, we're back to the middle point. So just like yesterday, we kind of frame this out and watch. Next point, and we start to fill in what are we expecting the market to do. Gets above the middle and holds, go to middle of Europe, right? Now, get above middle of Europe, get above middle of London. Where's my next thing I'm expecting? It should hit this IB high. Gets above Europe 50%. Next thing expecting, hit the high IB range of Europe. If it can't do this and get up here, then my expectation is IB low, right? Now the IB low of Europe has already been hit. Can we still target the IB low of Europe in the future? Yeah, we can, because the price comes up to 50% of Europe and can't get past there, then expectation becomes, 50% of this London, which could get in the way, but go to the low of Europe IB, go to the low of London IB. So it's kind of playing in this area, and you can see you've got these, kind of areas of action, areas of expectation that the market loves to hit. Is it 100%? No. Does it happen a lot? Yes. I can't put a percentage on it, but it's kind of common sense. You can start to see, where sellers and buyers have their stops, where are they interested in the market, where are the wicks showing you where buyers have stepped in. Well, down here it's towards the IB low. Up here, buyers pushed Europe up, and then sellers from this area just pushed it straight down, right? So all we can do is wait and see. If I see something that looks interesting and, we get a momentum push in one direction, maybe that's a way for me to hop on and get with that push. Monday and Tuesday, I think both of those days I took buy trades. I know yesterday, I had bought, I was a buyer twice, and I think it was towards the IB high of London. The first one, I got stopped at break even, which was right around the new hour, because I was expecting reversal. And it didn't reverse and still continued to push up. And that's when I got back into the buy again, on a really small little retracement back is where I got in. So never chasing price, never hopping into a candle that's still currently being formed. I need to see something on the chart. Price needs to come back to an area where I want to get in. And if price doesn't come back to the area, I just miss the trade. And I'm fine with that. So, yeah, I tried to trade pretty calm and cool. It's not always been that way. In the past, I was a highly emotional trader. I learned through an excellent mentor, teacher of mine, that I had the pleasure of being with for 2 years, that if you're emotional, you will be a losing trader all the time. Like there's just no way around it. You have to keep your head. You have to be realistic. You have to plan out things, you have to use common sense. And maybe the best thing that my mentor ever told me is, when you enter a trade, whatever your risk is, you already know that in your head. That's the cost to enter the trade. That makes sense, right? So you almost count on that money being given to the market to enter that trade to see if it works out. And that made a whole lot of sense. But, my mentor told me the only thing you control is your risk. How much can you lose? How much are you willing to lose in a trade? And I think for a lot of people, if you can reason with that and know, okay, this trade maximum I can lose 200. And with a fresh 50K account, how many how many rounds does that give you in trading? Quite a bit, you know. If you lost every trade, every single trade, you know, you're talking could be 12 trades, somewhere around there. You know, a lot of your trades aren't going to be 200, so maybe you get a few more. But at least you have 12. And if you lose 12 in a row, you're probably not analyzing the market too well, or you're missing steps in there. So makes a lot of sense. And when you start to grasp that you really can't predict the market or have a feeling something's going to happen, because the market always surprises you, but you can have expectations. And based on, you know, watching the market so many times, you're expecting certain things to happen in certain areas all the time. And when it doesn't happen, red flag. And so the first red flag for me was down here, this target for Europe, and they couldn't hit it. They came within like a point and a half. So as soon as they couldn't do that, my expectation is, okay, if they get back into the IB range, where is it going to go? 50%. That's exactly where it is right now. Would I take a trade on that? No, because we're in this junky POC area, right? So now we have to watch. If the buyers, let me mark this out, kind of go over my reasoning here. This moved down on the 5-minute, right? We know sellers were here, pushed it down. I'm just going to continue to say that from the VWAP down here to the 50% here for me. Let me mark this out real quick. We'll call it this area, this box of price action right here is an absolute no trade zone for me. One, we're in the POC area. You can see the volume building right here, right? Price is going to want to bounce back and forth erratically, give you like no indication of which way it's going. Like right here, just when you think, oh yeah, the buyers are in control, well, watch, the sellers probably pull it all the way right back down here to VWAP. Can those be trades? They can, but it's just not my style. I'm not a scalper. You know, I just don't take those trades. It's too much of a gamble. And for me, it's like a 50-50 trade. And it's almost my expectation in this type of trading and in the middle is like, whatever you think, do the opposite. That's really how crazy it gets in the middle, POC. But we'll see where this candle closes. You know, if the craziness around the POC continues, then I'm expecting it to just come on down, maybe test the bottom of Europe's IB range. You know, because if we didn't have the POC and we didn't have this really bad area, that would actually be my expectation. And the reason why is if you just looked at the purple square here, price moved down, they couldn't get to a target. They get back into the range, they go to the halfway point. Now what's the expectation? Couldn't get past the halfway point. So where is it going to go? The low. If they get past the low, where's the expectation for me? Go hit this target. Okay, they've tried once, couldn't do it. If they get back down here again and cannot do it again, then it starts to give me better evidence to expect the buyers really holding down here. And they're just waiting for people to sell this down, to buy up more, to push it higher. And so if they get down here and they can't touch this Europe target, they can't touch London target, you know, we'll have to see what happens with this, but it's interesting stuff for sure. So All right. So I'll give it a break talking for a minute. We'll just watch for a few and see how things pan out here, and we'll wait for some type of clear indication. You know, always let the charts give you clues as to what's going on. I feel like that is the best way to go with this stuff, really. Just taking a look at some of my other charts. I hear different things going off, and they're different tests and some other strategies that I run on simulator accounts, almost more out of curiosity to see if they work. I've never had any success with a robot or strategy at all. So, but I'm always game to like investigate a new one. But do I put like real money or accounts on it? The only thing I've ever had a strategy do is kill my account over the years. So it sounds great until that market condition for that certain strategy doesn't work, and then you get wiped out. So it doesn't seem to be worth it. I think it's better to learn how to maybe read the charts and have much better time at trading. So, might not get as many trades, but your chances of getting winning trades a heck of a lot better. All right. Let's see, 417. I'm gonna let this 5-minute candle close. You know, taking a look at this action right here. Price did come back down to VWAP. You know, we're definitely in this just rough area. My no trade zone was this 50% down to about VWAP. Right? That's why I have this box here. For me, this is just no trade zone. Anything that is created in this area, I won't even look at. I don't even care. We get outside of the no trade area, then I start to get interested and start really paying more attention to what the chart is telling me. And you can see a couple things. All right, let me take my circle from here. Sellers was the last little move down. Buyers came up to where the sellers were in control, and once again, the sellers stepped in and pushed it down. Okay, but these sellers right in this area, the people that are protecting the sellers, it's really important to see what are they going to do, because what do I want to see the sellers do? Get below this stuff, right? If they can't get below this stuff and the buyers take it back up, then what do the buyers do? Well, the last challenge point, and we've had it twice now, has been this area. So if the buyers can get up above here, they can close it above here, then really for me, target number one here, IB range high for London. If they get above here, then my next idea, IB high of Europe. They get above here, they'll probably eat through this fair value gap on this 5-minute because it's already been hit on the 50% to get up to it here, right? So I could see London definitely hitting some targets on the upside, but they got to get above this area. When this candle 5-minute closes, we're going to see, do they close below all this junk, right? Can this candle close it out and get down here? If they can get down here, then I'm interested in watching to maybe get in somewhere for momentum down. One place that I cannot initiate my trade is anywhere in this area. So unfortunately, if the sellers really took control and, you know, I'd like to trade around here, I just can't take it. It's just my rule. I refuse to do anything in here. Too many times I've taken a trade that's initiated out of this area and you think you're good. You put your stop right up here and they come out and whack. They get you by like a little wick that takes you by a point or two. And then it goes to your take profit. So yeah, if you want to feel crazy and not in control of anything, trade in bad areas, right? So uh, it's just me. It's just my personal deal, my rule set. So I'm sure the 1 minute probably looks horrible in this area, and you can see just all the sideways. There's, you know, what you can gain from this. To me, not much. It's pretty ugly. Uh, you know, that's 2 minute. Still, this is all no trade areas. You know, there is this okay area where you had a 2 minute push down from the 50%. When they held that 50%, you know, your next expectation is, well, they hold this, they're going to come back down to IB low. So how many points? So you're looking at, that would have been a decent, like 32, no, sorry, 36, 37 point trade, but no trade zone for me, you know. Um, you had this fair value gap that was made, good clean push down, came back up. To have 50%, you know, just doing a what if. So if you took a trade off of this fair value gap when the price came back up and hit like 50%, which I prefer the 50% on fair value gap. You know, you'd have your stop up above here. Cost you $37 to try it. Enter here, you get more than a 1-to-1, you know, maybe $45 or something like that. That's what you've been able to do if you took an entry off of that. Just an idea. Do I trade that way? No, not really. So, but I pointed out because I know a lot of people will take those trades, but it's taking a trade based on like a super low time frame that I can't put any faith into. So 2 minutes is just, yeah, not enough for me. All right. Quick check in for me on stuff here. Looks like while I was talking, I had one computer disconnect from data, which is always fantastic, especially when I don't hear it. Get that under control. Still watching the charts here. We still have a minute left on the 5 minute before we decide anything. Looks like I got to reload my data. Charts are off. Super frustrating sometimes when that happens. You think you're all good and you look at a chart and it's like, it's been at that price for a long time and I know the market's moving. So I knew I had a problem. And it takes a long time for my charts to reload. I use Ninja Trader for everything. It has like all the tools I really like and everything I like to do with my trading, my method works out better than anything else that I've ever tried. So let's see. Am I back? I think so. I think I'm good. Okay. Just had a really small, it was a tiny trade on oil using the same methods. I really try to focus on NASDAQ for this stream and analyzing that. But honestly, if I sit down and I'm not on YouTube and I'm looking at uh, this chart right here, 5-minute chart, and I see, oh, look at this, here's the POC. And I look at the action from Europe and so far in London, and I see how it's just back and forth. You know, POC, VWAP in a little range. Would I trade this? Would I even look at it? No, because I feel like I'm wasting time by looking at this up-down price action in an area I don't even trade. So for me, it needs to break out of this area and do something. So if I see that in the morning that London's opening at POC for the day, I usually will go to a different chart and I'll find something that is not around a POC, something that looks like it's got some movement, some trending properties to it. So, and if I look at it, like for instance, gold's way below the POC right now. Made a move down, starting to move back up. Oil had a move up, and then a move down, and then another move back up. And it was the move back up for oil that I took. So, anyway, that's kind of where I'm sitting right now. So yeah, we're right on the POC. Coming up on a new half hour. So half hour and hour can always be kind of ignition point. So what I'm expecting is London just keeps building, keeps dropping lots of volume in here. And then you probably see at a half hour or a new hour, price just start to explode in a direction. They build up enough orders here, they'll definitely get it going somewhere. How long that takes, I don't know. I didn't really see any super big red folder news for later, but so many times when there is important news, pre-market, New York, unfortunately, London likes to build for that, and you may not see them go too far from their range or their POC. So, yeah, we're just kind of stuck watching and not a whole lot of action so far today. So, did we have trades in here? Yeah, there would have been, some trades to play within the IB itself, but it's a location. Location is what kills the trade. And for me, there's two things that can kill a decent idea, and there's location and the time. Like new half hour or new hour, I'm always much more cautious to get into a trade around that time because I know those are times of continuation or they can be times of reversal. you know, I've seen just so many times where on the chart you go back and you look, well, what time did that move start? Oh, it's right on the hour or right on the half hour. And it's like that kind of every day. So, um, 5 a.m. London time can be a reversal, but we really don't have a move to reverse from. So, um, for me, 5 a.m., which is in a half hour, um, that could be just the move for London. So, but yeah, we'll continue to monitor it, and if something comes up and we get some type of trade, then cool. If not, then the best thing to do is look at this and say, I was smart enough to stay out of this. I didn't lose anything. I didn't lose an account, because you could see the absolute madness unless you're scalping for a couple points. If you're looking for a decent move, I don't know how you do it. You're down, you're up, you're down, you're up. Looks like you might be going down again. If you try to follow momentum right now, just my opinion, uh, you'd probably end up like losing account by the time London session's done. So yeah. Back connected, charts are connected back up. The only thing that hasn't happened is the price moving. So, if you're just joining me, no trades so far. NASDAQ, because we're just in the middle. Hugging the POC. We're into a new half hour. We got 30 minutes until the new hour. Looking for price to break out. Give me a clue. Give me an indication on a 5-minute chart, because I'm looking for the first real indication of something to happen. And I know if the price is moving like this, it's going to be doji time uh, on higher time frame. So 1 hour tells me nothing. 30-minute is just about as bad. 15-minute tells me absolutely nothing. So really what I'm looking for, I got to go to a lower time frame. I'm not going to go to 1 minute or 2 minute. Maybe 5-minute gives me the very first piece of information of a change of momentum, a change of direction, a shift, change of character. That's what we're kind of looking for. So, all right. But I'm not going to make any determination of a trade until a candle close. Because, I mean, if you look at it right now, you got a minute left in this candle. Man, it looks, buyers stepped in, they pushed it right back up. Now we're back up to the 50 level again. We know there's sellers here. Buyers are looking strong. Sellers have pushed this candle all the way down. Buyers got back in and pushed it all the way back up. But we've seen it once, twice. This could be third time that sellers step back in and they put it right back down to the bottom. So, if you were going to say, man, this candle looks great. It looks like buyers are here. I'm going to buy. You can. You could try it, but if you did that here, you got wiped out. Buyers move, 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 sellers, wow. And it same thing. If you're a seller, sellers move, do, and you're like, this is going to be awesome. It's going to sell all the way down, and then the buyers take it right back up, and maybe this is where you hit your stop. So Really important. So this is the end of the 5-minute candle right there. So what looked super strong still looks fairly strong because the sellers moved it all the way down, buyers moved it all the way up. They created a fair value gap. But oh my gosh, look at where the fair value gap is. It's right at the VWAP. For me, is this a trade? No, because it would be a buy trade. Buy trade would be initiated within my area of no trading, which is this light blue colored box I drew. Can't take a trade. Just won't do it. And, could a trade work out of here? Yeah, it could. And if any trade I'd be interested in, it would probably be this 5-minute candle push up, where it pushed up from, which is going to be right down in here. This VWAP, this clean move up looks great, but it's just within this area I don't like, and too many times you can see where price just wicks out. So if you took a trade here, you'd have to put your stop down here, but that's also the IB low, which is a target for the market right now, and if the target gets below the 50% of London, I'm expecting the momentum to go down and touch this. So, then you have to think about, well, I'll move my stop even lower. Risky, if the trade came down here, you would have probably lots of room if you put like a stop at IB low and you're just looking for 1-to-1. It's not much. You're looking at what, 11.5 points, I guess, somewhere around there. Is that right? No, 15. Around 15 points. We'll call it around 15. Decent trade. But there's one thing I know, the market around POC, around VWAP, this middle area is just not predictable. You don't know how many times this box will hold, price and contain it. So for me, it just makes more sense to see and wait for something to happen. And, I don't chase the breakout. If it does break out and it starts to move up here, then I wait for the price to come back to kind of that breakout point. And then I will look to get back into momentum in the breakout direction. Maybe that's the best way for me to explain it. But I also know they become risky around this area too, because my stop would be somewhere in this area. And I know if price gets into this area, it's probably going to dance around and it's going to hit everything in this area. And I guess at that point, you just hope that you can be like break even or maybe get a little profit before your stop gets hit. So, yeah. So right now I'm a little more interested on buyer side. So I know we've been in this area for quite a while, but we've got a minute left, 20 minutes before the new hour. We have a minute left on this candle. Can the buyers finally close above this 50%? Then the next challenge point for me on the chart is right here. Because buyers have tried to get up here a few times and they can't. This point was like, I think I called it the first little baby step. And buyers were able to come up and wick out things here, right? But I don't know, were they able to, oh, see, that's like an equal high right here, where this candle high, and maybe the last time it came up, they might have taken it by like a point. So if I look at the high here, last time they came up, they wicked it. So anyone that had a stop right at the top of this candle, probably lost their stop. So buyers were able to achieve something here, but it's not like super great area to really take a trade from. It doesn't really show me a ton of strength yet. You know, ultimately, I would love to see the buyers come in, displace out, close up, you know, maybe somewhere around this area, take this out, take that out, and then come back down into this area. And I would look to hop on board a buy and take it up to the target high, maybe. The first target, the 0.25, I think would be a great target up here to hit. I don't know how many points from IB high to here. 73 ticks. So, you know, it's not like a massive trade. You know, I'd probably get in and try a couple contracts on that. But all we can do is kind of wait and monitor the chart and look for some type of confirmation. Because right now, you're not getting anything. But if you play consolidation, you know, type moves within a range, you're doing pretty good in this area. Let's see, what is this range here? 176 ticks. So about, just guessing, about like 45 point range from top to bottom. You know, just kind of where I'm seeing like key level 50% to the bottom of like all these candle bodies down here. I don't really look too much at the wicks, but it's really kind of important for me to see where a candle body's stopping when I draw like a consolidation area. I would have this one drawn like that, you know, candle bodies, little dip out. You know, which would have maybe put me on alert. Oh, we got a candle that closed out and looks strong, could be breakout. But I got to bring in this 50% from the IB range because I know that that in itself can anchor a good consolidation area. So, but we'll see. Let's watch this candle. We got 2 minutes, 2 minutes left. Let's see what it does, right? Let's do hypothetical. If the buyers keep pushing this up, where do I want to get in? What do I want to do? Well, my trade is going to need to happen outside of this box. I can't wait for buyers to come back and engage somewhere in the box for me to take the buy. I'm going to need some type of really strong indication to take a risk like that. Yeah, I hate to put my stop in here because I know if price comes in here, it could be bad news. But I'd at least like to have my entry outside of that area and hope that if price does come back down, we get a good defense off of this 50% line for Europe. So this candle, I really want to see it close strong. And optimum would be close above this guy right here. You know, take this stuff out. Then what I'm expecting is, you know, maybe the sellers that are here at the IB high are thinking, we got to defend it, otherwise we're going to lose it. You know, let's try to sell more and more and more. And if buyers keep taking it over, sellers eventually give up. That's when you get the explosive move up. And which side is going to relinquish their pressure first? That's what I'm waiting to see. So, but have a little bit of indication right now that hey, maybe we do have some power coming up. But if you're looking for good convincing confidence candles, if I'm basing the buyer strength, let me zoom in. This is my no trade area. I wanted to see the buyers show me something, push up here, get above this guy. This is what I got, which is kind of like a doji candle. Wick here, small body. Small body did close outside of the junk zone. It closed above the 50% of Europe. Was it convincing? Not really. Is it a clue? It can be. It can be the same type of clue when you get really down into minute details and start looking, at how far did candles go in expectation. Well, I mean, we saw that down here where, if you're expecting the first target to get hit and it misses it by 1.5 points, 6 ticks, clue, buyers are here. And they've shown that many times, at least here, they've pushed it up. And it's almost the same kind of thing here. My expectation is close here. Give me a good, strong buy candle here. And take this out. Show me buyers, show me you're in control. And the buyers moved it all the way up and high. They got up to here, right? Which isn't even above the high point of this big candle body push down. So, I mean, sellers could be right here. They could be up here with their stops. So they're still protected. They're still in control and they are pushing it down again. So if it gets back in here, gets stuck in this zone again, expectation, I'm not taking the trade, but even if this zone didn't exist, right? We didn't have the POC, we didn't have the VWAP here, and maybe this wasn't a junky zone. Defending the 50% of Europe tells me they want to get back down to the bottom of Europe. And not only that, well, we have the 50% of London in the way. So if this candle in 2 minutes closes back within this junk zone, then my first expectation is for the price to come to here. And then if it closes below there, we'll go visit this guy down here and the VWAP and everything. Where I had mentioned, I would, if it wasn't such a bad location, I would look for a buy trade out of here. The only thing that gives me a little bit of faith that that could be a better area, and the buyers from this area, maybe a little stronger from the sellers up here in this area. Or actually, sorry, let me show you the exact point I'm talking about. The circle's a little too big. All right, the buyers here are a little stronger than the sellers that were here. The reason why I say that, that's just my thinking, is that when the buyers pushed up from here, they moved it all the way up, right? They got up to this area. And this time, the buyers with this candle and this kind of junky candle at least got above the body of the sellers here. But, we're not going to have like a change of character or, any kind of other change of direction until we probably get a close, above this candle, above this candle, above this body. If the buyers could do that, then it would give me a whole lot more faith to hop on momentum buy side. this action right here doesn't give me much faith in the buyers at the moment, especially with this move back down, close back down. So now, my thought, probably revisit the 50% of London's IB range. Now, I just mentioned that's my expectation. So does my expectation actually come true or not? If it doesn't, then, whenever my expectation doesn't work, it could be a clue that, oh, okay, that's not correct. The market's going to do something different. So if the market does not come back down here to this halfway point, which is also general area of the POC, if it doesn't come back down here and touch this area and it starts to push up, then I think we got something. So what am I going to look at now if I want to do a buy? All right. So buyer's close, got above the 50%. It's a clue. All right, so we're 9 minutes before new hour. This is also a good time for traps and momentum pushes to happen a few minutes before the hour close. What do I want to see for a buy, and where would I get in? All right, so to really dive into this 5-minute candle, sellers, they pushed down. They couldn't get below the buyers here, right? So even though it looks like sellers have come in and gained control, as of right now, no, they haven't. They haven't been able to get below the buyers in control in this area. So this candle in 2 minutes, 49 seconds, this candle can push up and get above the sellers here, right here, and close above there. And that's really important, not just a little wick up. Show me some strength. Show me the buyers are in control. Then what I would look at is a buy trade. Let's see, what can I do here? Let me go back to my circle, I guess. A buy trade somewhere around here, but outside of my junk area. Possibly an entry, right kind of at the top of that candle, but not a breakout entry. Like, I'm not just going to blindly buy. If this candle just shoots straight up like a rocket, I'm not just going to have it like a limit order set here to buy. I'll wait for price to come through here, close through here. Show me, prove to me buyers want this, they're in control. Once that candle closes beyond there, then what I'm looking for is the retracement back down to this area to get into the trade. So the next thing I have to figure out is, where would I put my stop in this trade if that happens? Well, I got a couple management decisions, because I know if it gets back in here, any stop in this box is in jeopardy. So do I want to give it some room to breathe? Yeah, that would be great. But I also don't want to take on too much risk. So I know price gets back in here, they're going to want to come back down to probably POC. I don't know if I want to defend that far. I know that this is, I think we said about 45-point range, this no trade zone. Yeah, so, it's about 80 some dollars of risk. Well, I'd probably try to keep the trade a little bit more tight if I could. Probably do a stop wherever this price action ends up here, 25 seconds. If it comes down, this is invalidated anyway, but I would be looking to say, a stop below, a current candle low. If the buyers stop them here, my stop is probably going to be somewhere in this area. I would prefer that it would be lower than the 50% because that's always a good defended area. But um, what's the risk look like? Hypothetical buyer step in right now, shoot it up. I would look for it to go up, come back down, get into the trade on the buy side, and my stop, well, as of right now, is going to have to be around this area. But it looks like sellers are coming right back in. So we're back into sideways trading. So yeah, as my fiance says, the subway. It's the subway trading. It is sideways. It's a small range. It's a small tube in the ground. It's the subway. So here we go. It's like the bad location, terrible price action, and now market's moving down. So expectation, just like earlier, was you get below all this stuff, it's going to come down to the IB low of Europe. Then expecting IB low London, a target, blue box, no trade zone. I had an original idea, but I can't take it because of location of the entry in my bad zone was here. I always like to kind of mark these out just to see if I did take it, would it have worked? My entry probably would have been 50% the fair value gap, and then looking for like a reaction, from VWAP to maybe halt the price, move it, turn it around, and shoot it up. So we'll just see what hypothetically we'll kind of put it there. My stop, bad area for a stop. I'd have to put it at the IB low, which I know is the target for the market. But how expensive is this trade? Not much. 50%. Call it $40 trade, $40. Maybe I can't break my rule. I was gonna say I'd take the trade for YouTube, but um, I don't want to get into bad habits and break rules of my trading. So it's more about me being disciplined, and I have to stick to my rules. So there's a period of time where that was like the first thing my fiance would ask me when I was struggling trading. She would say, "Did you stick to your rules today?" If I had a losing day, and it's funny because on days where I lost, it was usually because I broke a rule. I broke one of my rules. I know that the trade's risky, but I still took it. I broke a rule. So, but we're seeing, maybe something would have played out here, but it may have played out today, but it's 50-50. It's just not smart trading. All right, so I'll probably stay with everyone for, we'll go for maybe 30 more minutes after the market. We'll just see if we get any kind of move out. If not, I'll go outside for a while, walk around. Because this is really rough. This is hard to trade unless you want to scalp, a few points. And that's really the only play you have here. You've got the box. I can almost draw this out a little better. Let me get rid of my circles there. I'll leave this on because this could still happen after the hour. But really, the only thing you can do this kind of trading is you play the edges, right? So you got the box of no trading, you're consolidating, and then you're just looking at like, where do you engage? Well, you sell up here, get it back into this area. You buy down here, get it back into this area, and you just keep doing that over and over and over. And it'll keep working until it doesn't. That's the best way to describe it. It could work all morning, and it kind of gave me the first indication that we were starting to really consolidate. Let's see, where was the first indication? I would say right in this area was when I thought, okay, we pushed up, we came back down, now we're pushing back up again. It's starting to look really ugly. So you could go into consolidation mode right here and say, this push up, if it doesn't get back above here, I'll just take a sell and I'll target the middle. That would have been a winner. It gets down here, you're in consolidation mode, so you're buying the edge, you're selling the edge up here. You're gonna buy down here, target middle, hit. Comes back up here to the high, target the middle, boom. Comes back down with this candle. Now we're gonna see what happens here. So we're into the new hour. We know that new hours like to move, and maybe the 5 a.m. will bless us with a move. So we'll try for maybe 30 minutes, and if I get a move, I'll trade it. If we don't, we'll see you tomorrow. And but I will say, I will be monitoring my trade idea down here, and this would be an area I would definitely engage for reaction. So I'd be looking for a price to come down here and react back out of here. It's going to hit some targets along the way, and then maybe I get into a sell as it's moving down, but I'm looking for price to hit somewhere in this area, react back up. But the longer the price stays in this area around the POC, the more the volume builds here. Definitely, the more chance for a violent move in one direction. It's almost like a spring that they're pulling back, and then they let's go and just. But you don't know. You can't predict the direction of that move from this kind of price action. So pretty tough. Pretty tough. All right. So we'll give it about 30 more minutes and we'll see what happens. Just double checking that my charts are moving on my other screens after earlier looking and seeing price frozen in one of my charts. It's always more exciting for me to be able to get into trades and feel like my time is well spent. But there's nothing worse, in my opinion, than forcing a trade, and then you have a loss, and then you feel like, gosh, I sat through sideways through Subway in London for 3 hours and I lost. I think that's really tough. It's happened to me many times. And after a while, you just start getting the feeling that, yeah, I'm probably going to lose this. I've been in it for 3, 4 hours. The price hasn't moved, you know. It definitely gets risky the longer you're in a trade and it's consolidating. It's really a gamble. It's 50-50. Flip a coin. So, Okay, I always forget to mention this, but I appreciate everyone stopping by and being a part of this. Even though there hasn't been any trades, hopefully you're able to take away something um, and use it from just like my thoughts and analysis and how the market's moving and what it's doing. Um, you can use this knowledge in really any market. Um, you can trade this same 5 minute chart on really any instrument, oil, gold, ES. Um, I think it's pretty valuable. It's a little bit different, maybe. Um, it's been very successful for me, thinking about the market this way. So, if you like what I'm doing here, give me the thumbs up and subscribe. That would really help. I'm trying to trying to build subscribers to uh, 500 subscribers would be like a milestone for me. It'd be great. Um, it'd also be uh, nice if you're considering, buying a new account with Blue Sky or Bullnox or Funded Next. Maybe you can use one of my codes. That would be uh, a nice gift for me for the time I'm spending here live on YouTube, kind of sharing some of my knowledge and information. So, all right. Yeah, I'm not a big coupon pusher, but I definitely appreciate when people use it. Um, hasn't been anything too exciting yet, but who knows? Maybe in the future it will be. What was I gonna show? Let's see. Not that. Mm, I'm looking at my email real quick to show if I can find it. Mhm. Mm. Oh, it's an attachment. Oh, it is. Okay. Can I show this? Yeah, I think I can show it. This is from my email this morning, from yesterday trading. Oh, maybe I can download it. Let's see. That's probably better. Okay. Yeah. All right. I can show that. That's from yesterday. I'm a rising trader with Funded Next futures. I passed a 50K account. I think that's one of their 50K flex. Yeah, future flex. So got that this morning. It's funded account, and yeah, just thought I'd share that. While the market's doing nothing, I'll share that. So uh, I have some accounts, some funded accounts that I only use for gold, and I trade only gold with those. I have some accounts, very few, that I trade oil. Um, and I think everyone knows just from world events, oil can be kind of crazy moves at times, especially when you start getting tweets from people. Can really move the market. But the fundamentals of what I'm showing with this idea uh, remain true there also. And you try to get on board with momentum. You try to look for good, solid areas for reaction, and you can be successful with that also. So, but honestly, I don't trade too much on oil. Uh, that seems to be the one that is very reactionary to world events, and um, I get like notifications for things going on, but they are delayed. So you see the market just blast off in a direction. And then about a minute later, my watch starts to vibrate. And then I look at the message and it's like, oh, someone said this. And you look and oil's maybe moved like $3 in a direction. So you hope you're kind of on the right side with that. But um, if you keep it within reason, like I'm not even trading the full oil contract. It's just MCL, which is like the micro contract. Um, and sometimes some of these areas that I'm making, for instance, this area reaction area I made on the 5 minute for MAQ, um, those areas on like oil can be pretty big, even for micro. Um, so I go with the same idea, same budget idea, no matter what I'm trading. Gold, oil, NASDAQ. I always keep it to like $200. That way, I know, even like I showed you that um, rising trader certificate from Funded Next. I know on that one, I've got enough drawdown to give me at least 12 shots. If I lose 12 in a row, then uh, I'm incredibly unlucky. Not reading the market right. I'm skipping something. Something really bad's happening. The chances are, if I keep my risk low, um, even if I lose 2 or 3 in a row, chances are, um, hasn't been uncommon to win many, many, many in a row. Um, you know, sometimes that's dangerous too because you win so many times in a row, you start getting overconfident, and you say, maybe I'll take $200 risk. I'll make 400, right? I got myself in trouble uh, doing that. I want to say, how long ago was that? About a year and a half ago. Winning so much, like very high level, high 80% level of my trades were winners. I even had a couple months where I was in the 90%. And these really aren't scalps either. So, going for decent targets. It's a very high winning percentage, and it starts to um, affect your trading where you think I'm invincible. I can trade much higher risk, and you double the risk, you lose half of your chances and an account, especially if you're using like smaller prop firm accounts. So um, I've settled back in and prefer a certain risk set for certain contract level. Like for me, $200 risk on a 50K account per trade. That's pretty good. You go to a 25K account, my risk is going to go lower. Like I still want to have those chances to stay in the game, win, you know, be able to absorb some losses, but not lose the account. So, 25K account, you're looking at about $100 risk. So, it's not uncommon if I'm trading a really small account. If I'm looking at an area down here and I know this is like $80, well, it only allows me to do one contract. You know, I think the higher level accounts just give you a little more option. You have a little more risk. Like a 150K account. That would be for me. I'm going to definitely have my risk set higher. Um, maybe $400, $500 range. Um, if I have double the drawdown, and I still want to have a good amount of chances, maybe I do that. Maybe not 500, more like 300 to 400 to kind of test the waters. So, but you have to base that on how much drawdown you have. If it's like what 5,000, you know, it's kind of double of 50K, so you're looking at 400. So play the same game, but have a few more contracts to work with. So, uh, but still, allowing yourself good 12 chances or so before you just blow it up. But you can imagine, um, if you keep your risk in check, you don't over leverage, kind of keeping the same budget every time for a trade, and you lose some, you win some, you lose some, you win some, but you're always kind of at that level of I have 12 rounds before I'm out. You know, win a few, lose a few, win a few, lose a few, and you're just kind of like, you know, even treading water until you really start to get the hang of it. But once you get to a level where you're winning 80, 90% of your trades, um, it's amazing what you can do. Losing a few doesn't really bother you too much because uh, pretty soon I'm going to go on a streak of winning almost everything. Not going to over leverage, not going to increase, not going to try to make money back. Just let it naturally come. Keep the risk the same. You feel better, then you can start taking on more risk, more contracts, bigger accounts. So, all right, we got about 15 minutes left. Price has graced us with loving the POC today. staying right in the middle. So, um, if you took some trades targeting the POC for London, congratulations, you have lots of winners. So, and that's probably the strategy for a day like today. It seems like when London consolidates, it really likes to do it for a long time. So you're just trading the edges, targeting the middle, target the POC, which is kind of in the middle of my box that I drew out here. It's a lot of winners. You just keep doing that until the price decides to move and you lose one. So, but if you had the box drawn from, say, I think I identified kind of in this area, taking those edge trades back to POC, if that's all you were doing, you'd have a sell here on this candle. Let's see how many times it would have won. You'd have a sell here, back to POC, winner. You have a buy down here, back to POC, winner. You have a sell here, all within the same candle, back to POC, winner. Comes back up, sell up here, back to POC, winner. What is that, like 5? 1, 2, 3, 4, 5. Yeah, it'd be 5 winners. So if you're trading 1-to-1, risk to reward. So basically, if you're getting in at the edge of the box I drew, right? So you get in here, and you do like 1-to-1 where your target, let's see, it would afford you a pretty good stop. I'm just trying to get to a point where I'm close. Okay, so there's POC, so let's move it up a little bit. We're right about there. Okay, so doing 1-to-1, playing the edges to target the POC and just eyeballing it. I don't know, right to the tick level if the POC is right in the middle of my no trade area. But you're looking at about, we'll call it $45 for risk. If you take a trade here, your stops here, 45. To make a 1-to-1 and make 45. You can put this all the way through here, right? So every time price comes down to this low, you buy it. blindly buy it, and your target's the POC. You would have won this 5 times just from this price action. It's not what I trade, but you know, if you get into this zone, you don't know how long this can work. Just by drawing this, I wouldn't count this one. I'd count this first one because this is kind of where I identified we're probably consolidating. So you got 1, 2, 3. And this candle 4, and this move down 5. Then you'd want to see it come down here, get back in again, bring it back up here would be 6 winners in a row if that worked. But I would say, you know, you have to give yourself a room outside of the box, outside of the wicks, to have your stop, because at any time London could come out, wick you, and come back in and go back to POC. And it really shows itself up here, because if you play this game of consolidation too tight and see this wick here, well, if you go right on the wick, this wick took you out by like a tick. And then if you get into this trade to take it down, it wins right away. But let's say it doesn't and it comes back up, and you put your stop here, well, you get wicked out here. Well, this candle would have allowed you to win, but if you had a stop here, this candle wicked you out and then came back down to win. So for me, if you're going to play the consolidation game and try to target the middle or POC, you know, I would shoot for at least 1-to-1 just to protect yourself from a wick that could come out and take you, you know, like if you put your stop here at the low, IB low, wick could come out, take you by a tick, and then go right back to POC. So give yourself room, do a 1-to-1. You probably could win quite a few times until the consolidation ends and they finally are ready to hit the gas pedal and go somewhere. Yeah, we'll have to see. So they definitely got a good build going. I'm expecting a big move out of this area. Which direction, you don't know. You have to wait for candle close because, you know, it's been working this for at least what, about 2.5 hours of sideways. I wouldn't be surprised if first little peek out or move is fake. Bring it back in, and then they take it and go the other way. You just don't know. But actually, it's funny because I'm looking at this right now. So the price got down to, I think, where I was considering entering a buy. And I think the buy I was going to do was off of kind of like the VWAP. So I don't know if it actually hit it yet. It's close. I think at the time I thought it was from the VWAP line. I wasn't going to do the 50%. Let's look at that real quick. If you did the 50% of the fair value gap and you ran your stop down here, I think you'd have to go to the low. In order for that trade to win 1-to-1, it's got to get back up here. Let me mark that out. So for the 50% fair value gap trade to win, it would have to come back up here. Get above POC. This trade here would have been another entry, which was the kind of the start of the fair value gap. We just have to see if that one would have won. So in order for that trade to win on a 1-to-1, it would have to get back here. I'll leave that one. Well, let's see what happens. Maybe these sellers step on the gas. We get a trade here before before our time's up today. But you can see just how unpredictable price action is in these consolidation areas. In trying to like predict the price, like I think it's going to move up. Oh my gosh, you were wrong. like, yeah, it moved up here, but you're expecting it probably to go to the high. You lost. You expect it's going down for sure because it didn't go up, and then you're expecting it maybe to go to the low of the day or some targets below, and nope, buyers step back in. Then you're like, it's gonna go to the high of the day. No, now the sellers are coming back in. So it's all about show me on the chart. So the show me now, if I'm gonna get into something, uh, okay, so let me take this off because this is kind of confusing at the moment. I still have two places where I could take a trade. One, up here, if they break out and hold it above. Not so sure we get there. Second would be a sell option, but the sellers have to push it out of this box of consolidation, get below it, hold it, show me some strength to the bottom. Not looking so good right now. And if anything, maybe this trade would have worked. We'll see. We'll see if the consolidation still holds. If it does, it's my indication be done for the day. Come back later, closer to New York, and see what we get. Because this is a super challenge to trade. So yeah, would leave this on here so we can see if this trade would have won. So in this trade, my entry would have been basically, this was the start of the fair value gap, right? From this big move up. So that was my entry. My stop would have been here, right? My target's the white line. So my expectation would be for this to work, but I can't take it because my entry is in the consolidation box. And I don't play the consolidation game. I see it play out, but I just I don't like it because it's unpredictable. Sometimes this stuff maybe lasts for 1 hour. Sometimes it could be 4 or 5 hours. It could be all the way till 7 a.m. or 7:30 when pre-market orders start to come in and volume starts to pick up. This could be all that London's going to do. So. All right, so we got a couple minutes before half hour. Buyers holding right here. I just heard another connection lost on my trading. I don't know what account was it. Everything looks connected still, so I think I'm still good. Yeah, this is really rough price action to sit through, and if I wasn't doing something on YouTube, I wouldn't I wouldn't sit through this. I would probably periodically come back to the chart, like, once an hour just to see, do we get something going now or not. All right, so here we are. So half hour can move. I'll give this literally one candle and then we'll call it a day. So but if the price pushes up right now, I'll probably just end it now. The only thing that's close enough that I can really even consider doing anything with would be so that's kind of its closest location right now. All right. Well, if anything, we'll see here maybe in the last couple minutes if this trade would have won. So it would have been a consolidation play. Based on this low, I would have had an entry around this area. If you're doing strictly consolidation, it would have been a buy from the bottom of all the candle bodies on the 5-minute to go back to POC. So the consolidation play has a little higher target kind of POC line. My entry, not really thinking about the consolidation part, but my entry was this orange line. So I would have been in the trade a little earlier. I would have had more drawdown, but my target's a little closer. It basically would have been from there to there. Yeah, not super gigantic play, but close to 15 points. If that hit, my risk, it's 1-to-1, so it's 15 points risk, 15 points target. We'll see if it would have played out. I just can't take the entry because it's in consolidation box for me, and I just don't do those. So, all right, so my trade would have hit with that idea, and the consolidation trade would have hit also. You see it tracked from the low of the box right back to the middle, which happens to also be the POC of this area. So that would have been trade number 6 in a row of consolidation that would have won. So play consolidation. Maybe this is kind of a good roadmap. Maybe I'll call this video consolidation day. Maybe good training for consolidation traders. You can make money doing it. It's just not a style for me. It's hard to predict how long it will work. You can't predict price in here because it's just up and down. If anything, the prediction is for that to hold and you just keep trading it back to the middle of the zone where most of the price action is going to be. And that clearly shows that that is the case, and the evidence is the POC and the volume. This volume has been traded right smack dab in the middle of this nasty price action. So, all right, everyone, that's going to be it for me. Walking away from the charts, I need to take a break from that. It's hard to watch and go through, but maybe you got something out of that. It's much more tradable on the 5 minute. In consolidation, I think you have to go down maybe a little bit in time frame, because you look at the higher time frames, like 15-minute, 30-minute. I think it's harder. You'd have less trades. It's harder to really gauge, in my opinion, that area of close price action. So, all right. Well, give me a thumbs up. I know this was probably not super exciting, but maybe you learned something. Thumbs up and subscribe. And if you get a chance, use one of my codes, and I'll be very thankful. So, all right, everyone. We'll see you tomorrow. Maybe tomorrow we'll have some fireworks. We'll get something good. All right. So everyone, take care. Be safe trading today, and gonna trade later. And see everyone tomorrow. Thanks again for joining, and take care, everyone. All right, bye.